What's up, guys? So I think this is a topic that no one really talks about often. So I figured I might as well do it just because I own both styles. So for those who don't know what EA is an expert advisor that can automatically trade for you based off of a algorithm that is coded within the bot. So it's every EA can be completely different, but it can have similarities. So one of the similarities is how does the bot lose? So there are two main ways that bots lose: either stop loss or martingale. So the stop loss bot are self-explanatory. They use a stop loss. Now, like I said, there's always variations on how each bot does a stop loss. It depends on how it's coded. So some bots have a set stop loss where it's always 30 pips, it's always 40 pips, it's always 50 pips, it's always 20 pips. Then there are certain bots that use certain conditions to put their stop loss. Maybe it looks for the last low or last high. Maybe it does ATR. Maybe it looks at certain candlesticks. It just depends, right? And then there's martingale, and there are different types of martingale. So what martingale does basically is recovery. So it doesn't use a stop loss. Instead, what it does is looks to recover a trade when it's losing by increasing the lot size as the market goes against it, and then moves to take profit till it hits profits. And so each one of those are different. So I've been blessed and fortunate to make both. And I guess I'll say right off the back, I think my favorite personally has been my stop loss bot. And I've created multiple stop loss bots, and I've created multiple martingale type bots. And so I will say this too. There are stop loss bots I've created or used, they were just trash. But there are also martingale bots I've used that are trash. But I would say the issue with the martingale, which I'll get into, is it's a lot more risky. Now, I've gotten 9,000, 10,000% returns. I've gotten 30, 40% returns, all kinds of stuff. And I'll show you that a little later in the video. But right now, I just want to kind of focus on showing you the difference and giving you the difference between both so you can kind of make an educated decision on what kind of bot you want to look for. Like I said, I have both. I have created both. And I like my good stop loss bots better than my good martingale bots. And I would say this: martingale bots are easier to make because it's not hard to make a bot that has to recover a losing trade. So let's kind of explain what both are real quick. And so we're going to start off with martingale first, and what makes a martingale win, what makes a martingale lose, what are the dangers for martingale. And then we're going to get into and I'll show you one of my results from my martingale after. But we're going to get into how does the martingale work a little bit. And then we're going to get into like the dangers and the myths and legends and such, right? So this is how martingale works. Using this as an example, let's say that the martingale trade, let's say let's take this trade, right, and it came up here and won. And then took another trade like this, came up here and won. And let's say it came down here. It means, and basically what martingale is, when it starts going down and drawdown against you, what happens is that it can lose, right? I mean, not lose, but it open up a trade up. So let's say it starts off at 0.1. It's going to open up at 0.20, and let's say it comes up here, and now it wins. So the cool thing about martingale is based on how it's coded, it has won 2 trades now based off one entry. So it won this trade and this trade, hit take profit. So let's say what happens is so now we got 4 trades. When let's say it goes like this, and then let's say TP moves, the martingale bot TP moves. Like I said, it all depends on the coding. Let's say it moves about right here, and so now it comes up, and now it wins this trade, and loses this trade, but small because you want a 0.40 and 0.20. So it can be very profitable. Now let's say it does this. It might go like this. It might enter the trade. Let's take out the other trades real quick. And it can go like this. Now here's the problem with this far. And let's say take profit is moved to around here. Because what happens is it tries to like manage the trade by moving the take profit. So hopefully what the bot's hoping to do is it's hoping to come back up and hit TP. But if it don't, it's going to come back down some more and hit this. So if your balance is low, or you have, think about this, for $1,000, let's say this is a $2,000 account. So 0.10, not bad, $2,000. 0.20, okay, now you got 2 trades open on a $2,000 account. But now it's down here. Now you got 3 trades open, and you have a 0.10, 0.20, and 0.40 on a $2,000 account. And if it goes this far, it's you have 4 trades open with all this. So you might be negative $1,400 praying that the market turn around and hits this next TP and just lose these 2 trades and win these 2 trades, and you'll still be in profit. So the cool thing about the bot is you will win a lot with a Martingale bot. The issue is that if the market don't turn around in time, and it has not turn around, but it doesn't turn around in time for you to hit profit. So let's just give an example on this, right? Let's assume that if the market, as it's moving this TP is right here, and it keeps going down, that it's moving this TP to get close enough where it can at least make you some profit or break even. But let's say the market never turns around in your favor. So let's see what happens. Hit play. So now into that, it's going to keep going. Now your TP is here. So now you're like, okay, cool. Hopefully, the market turns around. Oh, wow. Now you're down here. You're a major drawdown. And that can happen any time in the market, right? You hit play. So now you're just hoping that the market just turns around and hits the TP. And that means you're going to lose this trade for, how many pips is this? This would be 103 pips. This would be 77 pips. For example, this would be 15 pips. So it'd be like 300 pips lost. But it would kind of make up for it because you have a higher lot size on this one. So this would be like 82 pips on the standard. But the question is, it's not the issue of you profiting. You're probably going to profit if the code trades it because it's such a high lot sizes. But the problem is, can your account handle that? Because this is what's going to happen. This is what could happen. It can come down. And now here's another. Now you have another one. And remember, guys, we have a $2,000 account. And we got all these trades open. Well, I meant to do that right here. Your account is probably going right now. Or you're praying to God that it turns around. And now your TP is around here. And you're hoping the market turns around. But like if you use this example, it went all the way up here. Never turn around. So this is what happens with a lot of Martingale bots. Either it's just a bad trade by dumb luck, or just because it's not a good entry bot. It hasn't good entries. Or news happens and the market drops. So I always hear people talking about, man, well, I gotta avoid news. I gotta avoid news. I mean, like people always ask me, does your EA avoid news? Yeah, my EA avoids news, but why do you want to avoid news? What's wrong with news? Because you care the market's gonna turn around against you. If you have a Martingale bot, yes. So I'm gonna show you a result from one of my Martingale bots. Now I don't really keep FF books like that anymore because I'd be just forgetting, to be honest. I just don't care. But let me say, I'll just show you this one real quick. And it's not to show you to want you to have a Martingale bot, but I've created a successful Martingale bot, and I still don't think you should do Martingale bots. I just want to prove my point to you. Like, look, I've created both type of bots, and I think it's this one. This is a real account. $650 deposit, $639 deposit, 9,800% return. So I've created good Martingale bots, but I want you to look at this. It went all over here, went up, drawdown. Oh, let me see if we can show the drawdown right here. So these are different drawdowns was in just to get to that. Now, that's scary, guys. Now, mine was a little aggressive. I did turn $600 to 10,000. I mean, not 10,000, like 18,000. So it was a little aggressive, but it's not the point. I mean, I could have been more conservative. So here's my conclusion with Martingale bots. One, they have the illusion to be profitable, because you gotta think about it. They win a lot. I mean, the market's gonna most likely, most of the time, gonna go like this, hit TP for you. Go like this, hit TP. Go like this, hit TP. Or originally hitting TP over and over and over. So it has the potential to get those gains. The issue is that when it don't go your way, when that COVID hit and it hit the news and the market tanked and it blew your account, when some random news event happened, when it just took a bad trade, it's too many factors to where your account can grow and it can hit 100. It can hit 100% fast, depending on the bot. But you got to ask yourself, do you want to take that gamble? So there's nothing wrong with martingale bots. They all work different. Some are better than others, obviously. But I just want people to understand there's no such thing as EA stop working. This is the myth. EA stopped working. The market makers are against us. The blah, blah, blah. No. It's just sometimes this happens. And you keep having multiple entries and you lose. Like, it ain't rocket science. That's all that's happening. It ain't the bot stop working. It's just there's no tweaking it. This is gonna happen. This happens a lot. And so then sometimes the bot just keeps doing this and making money, so that's fine. And then it can make money off this kind of stuff because it go up here, go down, go up here, go. So it can catch those as long as it swings back. But it's when this happens, or this happens, or that happens, is when you're losing. So let's talk about stop loss bots now. And we're going to talk about the good and bad about that too. Now, I do both. I have both. So, but martingale is more common than stop loss bots just because they're easier to make. It's hard to make a stop loss bot. Because one, you got to have a bot that can actually do good entries. Because if you don't, you're going to hit stop loss a lot. And so it's easiest to make a recovery bot because when you lose, your bot's losing, you just go and recover the trade. So stop loss bots, all of them are different. Some of them like, okay, look, they might have like a set. So let's draw this back up again. This time, some bots might have, this is the entry. We'll do a 0.10 again, whatever. And so some bots might say, look, you know what? Every time it takes a trade, I'm gonna do the price tool. It's gonna be a good video. Y'all share this video, like and subscribe too. So let's say that you always have your stop loss at 30 pips with this bot. The problem with 30 pips every time is this. Let's say it took a trade. Let's say the entry was right here. Let's say it took it right here. It came up. Oops, my bad. Let me put that. So let's say the entry is right here. And let's say the take profit is like right here or something. And it came up, didn't hit the take profit yet, hit your stop loss. So the disadvantage of having a set stop loss, which I think is the dumbest thing in the world, is worse than martingale to me personally. Why? Because the market's different all the time. So how can you have 30 pip stop loss all the time if every time the entry, the market is different? How can you have a different market entry but the same stop loss? Makes absolutely no sense, right? So when I think of if you have a stop loss, a bot that uses stop loss, this is what most of them do. So they know that they don't want a martingale. So this is what they do. This is the entry, right? So I'm gonna tell you about. I'm gonna do the bad for stop loss too. Then I'm gonna give you the good for the stop loss. So this is what most people do. Let's say this is the TP. We'll say the TP is. We'll do the TP. We'll do it different this time. We'll say we'll go this way. It says TP is right here. Say the stop loss is right here. But this is what their stop loss is going to be every time. Most of them just have their stop. They give you this is what they do. They'll give you a set. This is called a set lot per $1,000, for example. So they'll tell you per $1,000 do a 0.1. and we'll have a stop loss all the way up here, and they'll take profit here. So this is what's gonna happen. It's gonna go like this. You're gonna win. You're gonna win. You're gonna win. You're gonna win. One day it's gonna do this kind of move, come all the way up here, and let's see this stop loss. This stop loss is like 150 pips. That means that, and this take profit is about, we'll say 30. That means that you have to win. We'll say it's 150 pip stop loss. You have to win 6 times. Like for example, if let's say you win 5 times and you lost 1 time, you break even. But if you lose 4 times, win 4 times and lose 1 time, you lose everything. So the losing is this. This is what's gonna happen. So it's not super bad, but this is what's gonna happen. You win again, you win again, you win again, you win again, you win again. Then you might lose. So you gotta hope that you can just keep winning, then you have that 1 loss. Winning, then you have that 1 loss. Winning. So this is what can happen. You can be like this: win 1, win 2, win 3, win 4, win 5, loss. Win 1, win 2, win 3, loss. So I don't like those kind of bots because it also gives you a false narrative, like the Martingale bots. So I like bots that don't necessarily use or force you to use a set stop loss and a set TP. I like stop loss bots, the ones I make, that use equity. So what does that mean? Equity plus high and low. So I'll give you an example. Let's say that it's looking and it looks at the last high on that time frame, and we're going to do we're going to say take profits here, or we're going to do a 1-to-1. So whatever, we're going to use this tool. So whatever the stop loss is, this is how my bot works. Whatever the stop loss is, so let's say the stop loss is here. If we did 1-to-1, then our take profits about right here. So it's going to look at the stop loss and it's going to figure out your lot size. So basically it's going to risk, not based off a certain amount, it's going to risk like 1%. So for example, that now this is what happens if we're going to use the same scenario, but we're going to lose more. So let's say we're risking 1% every trade, and we'll say have a $1,000 account. We're risking 1%. So that means that every time we win $10. Every time we lose, win 10, lose 10. So this was happening. Let's say that option scenario, we went 1, 2, lost, 1, lost, 1, lost, 1, lost. So 10, 20, 10, 20, 30, 20, 30, 20, 30, 40, 30. So we made $30 profit off of those trades. But we only risked 1%. If you had risked 3%, for example, we would have won $90. And that's off a 1-to-1 risk to reward ratio. Now, is that the best way? Could be, could not be. But I feel like that's the safer way, depending if your bot is good at entries. And I'll show you an example on some in a minute, like I did the other one. But what's good about like the bot I created, right? I do risk to reward. So let's say that, for example, instead, we go for a 1 to 3. And we're gonna call this the new stop loss. And no, we're gonna call this the new stop loss right here. So it's gonna go from this stop loss to this. So this is what's gonna happen. if the bot has something where it can break even, like my bot, I have a bot that can make stuff break even. So let's say that I have the bot and we're gonna do off of multiple trades. But now we have it at 3 scenarios. Win 10, lose 10, or break even, which is going to be win 30, lose 10, or break even at $10. So this is how this works. We're going to do multiple scenarios. So this first trade enters here, and it comes all the way down. It moves stop loss. Let's say it comes all the way down to about right here. And then now it moves stop loss from here. From here to right here. And then let's say that it comes out here, guns back up, and it broke us at we'll bring it up a little bit. We'll do a 1-to-1. It broke us at $10. So we didn't make the trade quite yet, but we made $10 in that trade. Here, lost $10. Came all the way down, came up, came down, hit TP. Came all the way down, hit it again. Let's say news hit. And news spiked us out. We had a stop loss. Let's say news hit again. Hit this again. Let's say this is a regular trade. And it comes back up, takes us out. Comes back up, takes us out. Takes us out. I think this is pretty fair, like this. All right. So what happens is the first trade we won was $10. So it's $10. We lost $10, so we broke even. 10, so we're back at $1,000. We won this trade, we won $30. We won this trade, we won $30. That's $60. We lost this trade, we're at $50. We won this trade, we're at $80. We won this trade because it broke us even, but we had 10 pips above broke even. So we're at 90, 100, 90, 120. So you can, with the 1 to 3 risk to reward, you hit a certain amount where it's like, okay, it breaks me even at a certain amount just in case, and it don't break me even. It moves my stop loss into profit. So if it doesn't hit this point because it's so far away, I can at least take some type of profit. Same thing for here. Or sometimes it might hit it. And the good thing about it is news don't affect you no more. See, news affects you when you have a martingale because if it goes the wrong way. So, but this is what happens. Imagine when news hit you. If the news went this way, it would just take you out. But when you have it works great. News works great against you when you're winning because. So here's the problem. Let's say this was news, and news hit you TP right here, and it's a good TP. That's it. You're out. So you missed all of that area. Let's see, TP was right here. It's out. But if you're if your stop loss is down here, or you have a martingale and you got multiple positions, you're going to be losing a lot of money. But you don't benefit anything from news when you have a small TP, or you have a martingale that goes against you. Because even if it wins, it just runs regular. It's still the same TP. Martingale doesn't have a huge risk to reward because it's not made to go for a long distance. So look, this is what happens when you got that. You just boom. And that, whew. So you knocked it out. So, like, I'll give you an example. I'm gonna give you an example of what happened. I'm gonna do an example of 1-to-1 first. So let me see the 1-to-1. I have a 1-to-1 bot, which is 1-to-1 over and over and over. So this is one of the bots I also got, and this was trading a 1-to-1. So if you notice, it won, lost around the same amount, won around the same amount. So in order for this to work, it obviously has to win more than it loses. I don't have any trail on this. It goes straight 1-to-1. So if it's risking 30 pips, it's aiming for 30 pips. If it's risking 60 pips, it's aiming for 60 pips. And it chooses the lot size based off of, I did a 3% risk. And so it chose lot size by stuff there. So this is just, I'm just showing you some little quick test accounts on this stop loss bot. And this is off of 1-to-1. So I'm not going to take too much more of your time, but I'm going to show you one with the, I'm going to show you two examples of what happened with actually that GBP trade. And I think this was like a 1-to-3 or 1-to-5, 1-to-3. It was like 1-to-3. So, oh, here it goes. Perfect. So what happened was, it took this trade right here. Stop losses right here. Drop. Took profit right here somewhere. It went from a 1-to-3. So you know this is like, this bot caught 130 pips right here. Like maybe 80 pips here. And so that's what makes this a special bot, because you can choose your risk to reward and so forth. And like I said, I got the Martingale bots too. I got some pretty good Martingale bots also. Martingale style bots. So hopefully, you know, this was an informative video. So even if you don't mess with the bots that I created, I hope this informs you on what kind of bots you should be looking for, and to kind of avoid the fluff. Like, yeah, this bot's winning, but it's using Martingale. So take it with a grain of salt. If it's using a set tape stop loss and the stop loss is 100 pips and it has a set lot size, take it with a grain of salt, right? The bots that win and lose are the bots you kind of want because it's more realistic. The ones that win a lot because they're scalping 5 pips with 100 pip stop loss, or they're Martingale in it, it's inevitable. So it's easy to sell those bots because you can just trick people into thinking it's great until it's not great no more. But you can get people paying it monthly, and it can be good. You can get 100% of your money. There's nothing wrong with those bots. I just want you to understand those bots, because if you understand it, you understand why it lost. It's not because of market makers. It's not because of news. It's not because of it's suddenly stopped working after 6 months. That's just the nature of those bots sometimes. So there's nothing perfect in any of these bots. You just got to figure out what works for you best. Hope you like what I said. Like, subscribe. If you're watching from my members area, hopefully you learned something. You know, I have a lot of different bots, and I'm always creating new bots. So you know, you can choose which ones you want. You can try the Martingale ones. You can try the stop loss ones. I have a library of them. So y'all stay blessed, and I'm looking forward to y'all success.